Bitcoin's price has retraced from a recent swing high near $21,000 to a low near $18,000. The next target is near $16,000, which would represent a 15% decline from the swing highs. A reversal in the trend could occur later in the month, but it isn't likely given the persistence of bearish pressure. Although Bitcoin's recent price drop is not as severe as last year's bear market, its failure to break above the $20,000 level is still a cause for concern. Many analysts are looking to see if the currency will experience a repeat of the events that led to its decline in 2017, 1,392, and 2013, 1,394. If the trend continues, Bitcoin is likely to drop to the $19,000 level and possibly even below. While Bitcoin consolidated near $20,800, altcoins have risen. Ethereum gained 5.5% and is now trading around $1,100. Meanwhile, the US stock market remained slightly bullish yesterday, with the S&P 500 index rising 1% and the Nasdaq index up 1.5%. The improved sentiment among investors may have pushed Bitcoin prices higher. While this may not be a perfect indicator of Bitcoin's future, there is no reason to think that it can't grow in the coming months. It is clearly a new asset class in the making, and its successes are starting to attract more mainstream attention. Not just Sui Chung, but Holger Schepitz, a leading German financial commentator, was a big contributor to this story. Bitcoin's price has been trading in a narrow range of $17,000 to $23,000 for almost a month. The retracement that occurred Sunday could signal the start of a massive correction that could send the asset to $20,000 again. However, the CIO of Guggenheim Partners remains bullish on the asset's long-term prospects, saying it could reach $600,000 within the next few years. Despite the recent retracement, crypto traders remain looking ahead to Wednesday's Consumer Price Index, CPI, a widely regarded measure of inflation in the US. A recent market sell-off has caused Ethereum to dip to $1,456. A report from the Federal Reserve has prompted traders to cut losses. It said the Fed will continue raising interest rates and will keep them at high levels to combat inflation. This report was long awaited by crypto experts, who have been waiting for the Fed to reveal its thinking. While the stock market has had a rocky week, investors should not be discouraged. The crypto market's fall has been much quicker than the stock market's. Bitcoin has fallen by more than 20% over the past week, while the S&P 500 has dropped nearly 6%. Similarly, the tech-heavy Nasdaq Composite Index is down 6.2%. Yet, the cryptocurrency market's fall is a sobering reminder of the perils of a digital gold rush. According to Matt Maley, chief market strategist at Militaback Plus Co., the cryptocurrency market was too hyped in the beginning. While a recent market sell-off has led to a decline in the price of Ethereum, it is far from the end of the story for this cryptocurrency. The founder and CEO of Belfrix Group, Praveen Kumar, says that the current volatility in the crypto market will also affect the price of other coins. Though the market is unlikely to recover anytime soon, some experts suggest buying dips to lock in gains over the long term. The sell-off in cryptocurrency prices follows the Federal Reserve's minutes released on Wednesday, which signaled that it is likely to raise interest rates until inflation cools. The largest cryptocurrency by market cap, Bitcoin, fell to a low of $21,315 on Friday, taking its annual loss this year to more than $57,000. The Bitcoin price has continued to suffer from volatility this month. The digital currency briefly dipped below $20,000 on Saturday. As of mid-August, it is down over 18.7% from its recent high and is trading at $19,996. Ethereum, the second largest cryptocurrency, has also been struggling recently. Since the beginning of August, it has lost 24.7% of its value. While there is no guarantee that the cryptocurrency will remain above $20,000 in the next few months, many observers believe the crypto market has found support near that price. The price may dip further in the coming weeks, as the Fed has renewed its inflation warnings. For long-term investors, a dip in the price of Bitcoin could be a good time to invest. However, experts are warning investors not to rush into crypto investments at this time. The Fed has been attempting to rein in higher inflation, pushing stocks into a bear market. As such, the Fed's decision to raise interest rates is likely to be closely watched. Moreover, the price of Bitcoin has been closely tied to that of US stocks, and a possible shift in regulatory landscape will certainly impact investor sentiment. Historically, Bitcoin has been volatile. During the mid-July sell-off, it dipped to under $8,000, but quickly rebounded. Despite a large drop in value, it still maintains a higher level than the all-time high of nearly $69,000 in November 2020. The cryptocurrency is on track to reach its next all-time high of $68,789 in November 2021. Apart from falling prices, the crypto market has also been hit by problems at major players. Some companies have ceased operations, while others have hired financial advisors and are exploring alternatives for their assets. For example, Asian-focused crypto lender Babel Finance has temporarily suspended withdrawals, which could cause further depreciation. Two competing coins, Solana and Avalanche, have fared worse in the recent Bitcoin market sell-off than Bitcoin itself. While Ethereum remains the dominant smart contract network, Solana and Avalanche are gaining popularity and are quickly climbing the Ethereum tree as a rival. Both have soared more than 500% since mid-2021 and are currently trading in the $23 range. Solana has recovered from its June low of $25, but needs help to reach its June high of $95 per coin. Avalanche and Solana are also down more than 30% in 1 week. However, Solana and Avalanche were bought by a large number of investors as a reserve for their digital currency. However, the underlying crypto markets are still under pressure. In particular, the collapse of the Terra ecosystem and USD has put a huge amount of pressure on the crypto market. After the sell-off, Bitcoin and other major cryptocurrencies have rebounded. Solana and Avalanche are both good options, but you should be prepared for some volatility. Despite this, they are expected to continue holding up in the long term. Solana and Avalanche have a lower price than Bitcoin and are an excellent alternative to Ethereum. Although Solana and Avalanche suffered from dips during the sell-off, they managed to stay positive for the month. AVAX reached a monthly low of $3.18 on the 4th of November and then rallied above the $4 mark near the end of the month. In the end, it closed at $3.69.